it is an honor for me and a great pleasure to welcome for the opening session Kalpana Morparia. She's one of the most powerful voices in Indian banking. Ms. Morparia, thank you so much. Welcome to the ET Financial Marketers Summit.
Thank you very much for sparing the time for us, ma'am.
It's a pleasure. Thank you for inviting me. I'm delighted to be here.
The pleasure is all ours, ma'am. And indeed, there is no better way, I think, to lead today's proceedings than to have a chat with you. The BFSI industry faces a slew of challenges, and we're confident your views and insights will paint the road ahead for us.
And of course, to the audience, we'll say everybody knows Kalpana Morparia, right? So currently, she is an independent director on the boards of Dr. Reddy's Laboratories, Hindustan Unilever, and Philip Morris International. Most recently, she was chairman of JP Morgan South and Southeast Asia. She was also a member of JP Morgan's Asia Pacific Management Committee.
As we all know, JP Morgan is among the top 5 banks in the world, the largest bank, in fact, by market capitalization. No matter where you look, whether you look at revenue or assets, it is way bigger than India's largest bank. And perhaps the world's biggest bank if you discount the 4 Chinese state-owned banks that are perched on top. So Ms. Morparia's influence actually goes much beyond the Indian shores.
And prior to joining JP Morgan, of course, many of us, in fact, most of us would remember Ms. Morparia. She had a very long stint at the ICICI Group, where she was the vice chair on the board of ICICI Group companies, and she was joint MD of ICICI Bank from 2001 to 2007.
Ma'am, as a financial journalist, it's a dream come true that I'm here on the panel having a chat with you. So before we get into specific questions, some opening thoughts are in order. Ma'am, give us a candid view of what you see are the biggest challenges and opportunities that the BFSI sector faces today. It's a once-in-a-century challenge that we faced with the COVID. So what are your views on the near-term demand creation, sustainable growth areas, and should we focus on private consumption? What is the risk of that on the rising NPAs? All of that, give us give us your views.
Thank you. That's a lot of things to address in the short time, but I will try and do my best. But first, may I request you to call me Kalpana? Mrs. Morparia sounds too formal for a nice chat with you and your viewers. So I'm actually very excited with the opportunities for the BFSI sector. And the reason why I'm so excited is because India has a unique ability to leapfrog several of the steps that the developed world had to go through as you saw the journey of the BFSI sector in the developed markets in the current century, the last 2 decades. And I'm going to take you back a little bit to 1990. You know, when the new licenses were given to private sector banks, NBFCs were growing at that time as well. And people were saying it will take India so long to really even bring technology into banking. And to cut a long story short, India elected to junk the mainframes and move to a distributed architecture for IT. ATMs proliferated in the country, and look at how fast banking grew in terms of online. I remember at the turn of the last century, we were talking about internet, call centers, etc. That time mobile banking wasn't there, being 35 to 40%. Cut to where we are today, 90% of transactions take place either on the mobile or on the internet. And this is an amazing journey. So it's not only, I think, the smartness of the Indian banking sector in terms of embracing digitization, but it's really the steps taken by the government to proliferate access to internet across the country. Also, the entire smartphone rapid increase that we're seeing in the country. But most critical compared to all of this is the tech stack that we created. The UPI open architecture that India has created, I think, is unique in the world. Just as our biometric identity is unique in the world for a country of 1.3 billion people, the open UPI architecture, I think, is absolutely unique in the world. So how do I link this with leapfrogging? Today, plastics, we're going to just leapfrog plastics. If you remember a few years ago, we would all lament the fact that, whilst we have a number of debit cards, look at how small our credit card number is for a country of our size. No one talks about it today because UPI transactions are more than even debit card transactions. And this, therefore, is tangible proof that India has successfully managed to leapfrog plastic. And therefore, today, look at how well the Indian banking sector, and it's not just the ICICI, the HDFC banks that have done it very well, or Bajaj Finance within the NBFC space. Look at our very own State Bank of India, which is a state-owned bank. You would not normally associate it with a lot of technological advance, but with their YONO app, look at what they've done in terms of giving access to people digitally. And therefore, I'm very excited. So whereas it would take us days and weeks, if not months, to get a credit product approved in a personal loan, you can do it in 5 minutes if you're an existing customer. When you go shopping on the net or when you go to a consumer store, you can get instantaneous EMIs available to you. And this is really the power of technology that has been so well harvested by the Indian BFSI segment that makes me, this is in the context of the consumer journey. We can go on and talk about what this means in terms of efficiency in the corporate banking world, in terms of real-time settlements, giving access to companies for their risk management products, so that a bank branch literally now is used more as a selling physical presence, because no corporate treasurer ever wants access to a physical branch. That physical branch, in JP Morgan, we used to call it the virtual branch, sits on the desktop and soon the phone of every corporate treasurer. You wanted to talk about growth in this segment. And even if you see in the worst NPL cycle between 2013 and 2018, you still saw the retail, the consumer segment actually growing quite well. And you heard the chairman of State Bank of India saying that over the next 5 years, they're possibly going to see a doubling of their mortgage book. So mortgages, to my mind, are going to be a key driver in terms of the asset growth that banks and NBFCs and HFCs will see in their balance sheet in the years to come. Low interest rates, price affordability, all of that is driving a big housing boom. I also believe that in the next few years, you're going to see a massive capex cycle in India. And I would love to talk to you a little more about the efforts on the part of the government to encourage more local manufacturing, this whole Atmanirbhar effort of the government. And I see a capex cycle that's just beginning in India that we will see over multi-decades. You see, until I would say 12 months to 18 months ago, India believed that we were going to be the service nation to the world. Let someone else manufacture, we will import it. I think COVID, geopolitical events around India have suddenly woken up this country to saying, I have all the resources that I possibly need in my country. And why would I say I will merely be an importer for everything starting from safety pins to the most advanced semiconductors? We have the talent. We have the entrepreneurial spirit. We certainly have seen multiple Indian entrepreneurs dream big, roll out massive projects over the last several decades. And why is it that we are cutting our ambition now? So I actually see a very big fillip to manufacturing coming in as well. That coupled with a multi-decade low of debt equity ratios for the corporate India is actually going to lead banks another opportunity in terms of funding brownfield projects, and indeed, I might say greenfield projects as well.
You're on mute, Alokesh, there. Many say that that's the most
that's
said
all the things
sentence.
that you always miss out. Thank you, Kalpana. That was really wonderful. Coming from you, those opening thoughts do give us a lot of hope for the future. The budget of this year also has, increased its capital outlay by quite a bit. And do you feel, once we come to that, they've also mooted, in fact, they've brought back the idea of the DFI, the Development Financial Institution, which was critical, about 20 years ago, and they've brought it back. So obviously there is some, and you were a huge part of that whole, DFI economy that was there, ecosystem. Do you think the increased capital outlay of budget 2021, will it give the economy the kind of push, that is needed for us to recover from, like Suchetana said, once in a century kind of event? And also the idea of the DFI coming back. What are your thoughts around this whole area?
So I think this budget will go down in the annals of history as one of the budgets that actually spurred a lot of investment in the country. And I'm really glad that the government has decided that it is time to loosen the purse strings and focus on growth. And government will have to be the initial party spurring that growth, even as private sector gets emboldened to come up with more capital expenditure. One of the laments of some of the Indian industry has been that we are actually very committed to unleashing a big capital expenditure cycle in India, whether it's across electronics, chemicals, pharmaceuticals, more importantly, commodities. Because if India does not invest in core commodities, we will become the second largest importer in the world. There was a recent research published by JP Morgan that talked about how India really needs to double and treble its investment in the core commodity sectors, whether it's steel, aluminium, refining, for us to really meet the demands of an economy that's going to grow phenomenally. So one of the laments of the Indian industry has been, all this is great, but where is the financing going to come from? I actually believe that there is no dearth of financing. We've seen companies access the capital markets because when the initial construction phase of the project is over, there are ample instruments available to do takeout financing. The overseas bond market, the Indian bond markets as they are maturing more and more. If you look at the number of corporate debt issuances that took place last year compared to the overall drawal of bank credit lines by corporates, you will see very clearly the point that I'm making. But that still begs the question, okay, who's going to come forward and really fund the construction phase of the project where the risks are highest? Particularly in a sector like infrastructure, where you're reliant on a lot of government licensing rules, tariff issues, land acquisition, right of way for road projects, etc. And therefore, one could legitimately argue that a financial institution that was singularly focused in terms of spurring this construction phase financing is something we need. I believe it's wrong to call it a long-term developmental financial institution because that model is well and truly dead. However, you do recognize that over the 3 or a 5 year period that it might take for construction, particularly for very long gestation projects, you could do with an institution which is sponsored by the government to assume a risk there. So to my mind, I would rather call it a project finance guarantee corporation, which agrees to take the first loss default during that implementation phase of the project. Once that is done, the likes of our large banks, whether it's State Bank of India, ICICI Bank, Axis Bank, HDFC Bank, Bank of Baroda and others, they're going to come forward because they know that the first loss is going to be taken by this institution. So the 20,000 crores that the government has put as outlay for this, I think should be matched by 20 or 21,000 crores coming in from other sovereigns, quasi-sovereign bodies. And together you put an institution worth 40, 41,000 crores, where it's doing a first loss guarantee for, see, 50, 20% of that. Your leverage is much higher. Otherwise, you set up an institution with 20,000 crores and concentration limits that prudent regulation will always require, that you cannot lend to a company more than 10 to 15% of your net. You can imagine, therefore, how many projects are they going to be able to finance? And you're just increasing the concentration risk there. Whereas if you're now required to fund projects of 50, 60, 100,000 crores, you will need someone saying, okay, I will take the first loss report and then bring in this. And once the construction phase is over, the long-term saving pools, whether it's overseas investors, through our masala bonds, or indeed the Indian long-term institutions like Provident Fund and the insurance sector will actually come in, because they are actually looking for high or moderate yield, stable, long-term yielding assets.
Ma'am, you brought up the question, brought up the topic of insurance, but before I go to that, one small question. So you think that DFI will perhaps bring back the animal spirits that have been missing in the Indian economy from the private investment perspective? Because many observers believe that it's a policy flip-flop, which is the villain of this entire piece. You think it is DFI which will answer all of that?
So I believe the policy certainty is a must, because to say I will set up a DFI who will assume all the risk of any policy turning turtle on us in the implementation phase is really bad finance and bad economics. So I believe we need certainty in the policy prescription. The entire way project finance used to be done, you got a piece of land, you just hope for everything else to fall in place and embarked on your construction phase and tied up bank financing. That's not going to work. You will have to fully bolt every aspect of that project finance, whether it's access to the mining rights, whether it is access, acquisition of the land, all the regulatory permits, those are done. You bring in this project finance guarantee company in, banks will naturally line up for financing that, and then you've got a winning recipe.
Right. So, Kalpana, this is, you are saying that DFI will almost be like an insurance for these projects, like, so you have a backup, because these projects are very long gestation, like you mentioned, they're very long, and to break even, forget profitability takes quite a lot of time, and taken down quite a few companies, in that effort. So just to take off on that, the insurance sector in India, because this is, like we said, the financial marketers summits, we have a lot of insurance people also listening in. India's insurance sector has generally lagged its, Asian counterparts. So now that the FDI limit has been increased, to 74%, and there is a possibility of an LIC IPO coming, do you think these kind of steps are going to give the sector a boost in India?
Absolutely. It's close to 21 years since the first license was awarded to a private player in insurance, right? Ever since insurance got nationalized. And the journey from 26 to 74, I think, is going to give a big fillip to the insurance segment. And it's absolutely necessary for channelizing long-term savings of such a young population in India. Whether it is the pension plans, the insurance companies channelizing long-term savings, and then putting them in moderate risk, or I would say argue that after the implementation phase is over, it's really very little residual risk, and give them access to this long-term assets that you need to match the long-term liabilities that the insurance companies and the pension companies would be undertaking.
Right. Ma'am, we'll end. I mean, it's been lovely listening to you. We'll end this session, but with one question. That is, 20 years ago, ma'am, you really led the trend of women bankers occupying the corner office and providing real substance to India's most critical sector, which is the BFSI sector. Today, we don't see this trend continuing. You and your compatriots at that time have not been succeeded by women. How can we groom the next Kalpana Morparia and other great female leaders that we saw during your time?
So I think it was one of those coincidences that take place in history, that at one particular time you saw a lot of women leaders. We're currently not seeing that many, although that's not true in the foreign bank segment, right? Until I retired recently, there were 4 of us leading foreign banks. And I'm sure it's a question of time where you'll see, if not 40, 50%, we'll see that over the next several decades. But you will see close to 15, 20% of women coming up and occupying the corner suite. I think the problem really that we are seeing in terms of greater gender participation in senior roles is that there is a fair amount of leakage at the middle level.
Yeah.
So if you ask anyone in the BFSI segment, at entry level, we're roughly the same. Not 50-50, maybe 40-60. But in that mid-career growth phase, you tend to see a lot more leakages. And I think both companies and women need to be addressing that leakage. Once you address that leakage, it's very natural as the pyramid gets narrower for you to see women
So
rise
how do you
up.
do that? How do you ensure that the leakage is not there? How do you ensure like a Bumble-like listing happens in India, where a woman is holding her child and managing to list a billion-dollar company?
And if anyone can do it, it's the Indian women who can do it, because we have a phenomenal support system in our country. Our parents, in-laws uproot themselves to be with their daughter or daughter-in-law and support them. And we also have a lot of support infrastructure around us. So I think it's really hand-holding women during some of those key phases of her life and make her feel wanted and engaged in the organization. That's what companies need to do. Women themselves need to do something. I just can't say you do everything for me. I need to do something. See, come what may, I'm going to make the necessary adjustments and I'm pursuing my career in my own right.
Here's to another decade of that will be ruled by women, ma'am.
Thank you so
Thank
much,
you.
Kalpana, for joining us. It was a real pleasure speaking with you, and do stay with us for the rest of the program. Thank you very much.
Delighted. Thank you so much.
Thank you.